even decides the price of what you trade, of what you buy? Let's stop looking at the charts because, quite frankly, the charts can actually be a lie. Now, I think you clicked this video because you, like me, want to know why the stock you seemingly just buy a second ago immediately crashes as soon as you buy it. Or why the stock you just sold immediately rallied thereafter. You think it's bad luck, you think you're like the worst trader ever, you think it's the universe punishing you. But it's not bad luck, it's a programmatical algorithm designed to harvest our liquidity. And if you think I'm conspiratorial, then you really aren't looking deeply enough into these markets. Because today we're going to be performing an autopsy on the free market. We're going to be exposing the 4 big entities that control actual price movement. The market makers, the algos, the option dealers, and, surprise, surprise, the Federal Reserve. My name's Justin Banton, this is the House of Trade. Give me a like, give me a share, give me a subscribe. By the end of this video, hopefully, you will realize that supply and demand is a fairy tale that they tell traders to keep them depositing money. You aren't a participant in this market, you are actually the fuel, the accelerant, the gasoline, the catalyst, the money that goes to the slaughterhouse. So, welcome to the slaughterhouse. Let's dive into it, right? I'm Justin Banton, this is the House of Trade. Give me a like, give me a share, give me a subscribe. I said it once, I say it again. To understand how the rig works, we have to look at who is the sucker of the rig. We need a volunteer. And as we always do in our stories and our videos here, let's give him a name. Today, we're gonna call him David. Maybe Deceptive David. No, the Deceived. David the Deceived. Now, David the Deceived is a smart guy. He reads the news, he watches CNBC. David sees a stock ripping higher on good volume, and his brain floods with dopamine, like all of our brains do when we see it. We get that FOMO, right? And David feels the FOMO kicking in, right in his brain and right in his gut. And he thinks, this is the breakout. This is it. So what does David do? David obviously buys. And for exactly 30 seconds, David feels like an absolute genius. But then the candles turn red. The price slips below his entry, then it slips below the support line. And now that dopamine is replaced not by serotonin, but by cortisol, the stress hormone, the fear. But David holds. He prays. It's just a pullback, he says, but we all know that prayer and hope is not a strategy in these markets. So the price keeps dropping. And the pain goes from being psychological to psychomatic to full-blown physical. Now, finally, David can't control it anymore. He can't take it. So he hits the sell button to stop the hemorrhage, to stop the perpetual bleed that seems to be plaguing him every single trade. And the exact second he sells, the exact second, what happens? The market reverses and it rips to new highs without our dear friend David. And without me, and without you. David thinks it's a conspiracy. And for once, our friend David might actually be right. Why? Why is David actually right this time that it is a conspiracy? Because you know what? You might be paranoid, but you're not paranoid if the people who you're worrying are chasing you are actually chasing you, right? There is a statistic that we all know in this industry, and it's 90% of retail traders lose 90% of their money in 90 days. Now, that's not a statistical anomaly. That is a business model, and I've been there. The first time I opened up a trading account, hey, I didn't blow it, but within 90 days, I was pretty much on my knees, right? And it happened a few times until I got consistently profitable. Now, the market didn't reverse after our friend David sold just by accident, right? It reversed because David sold. His stop loss was the specific pocket of liquidity the algorithm was hunted. But it wasn't just him. It was 1,000, 10,000 Davids who all act psychologically as the herd altogether. And here is the pattern interrupt you need to burn into your brain. The stock market is not an auction house where the highest bidder wins. The FX market isn't, the crypto market isn't, the commodity market isn't. It's a biological extraction machine. Now, what do I mean about that? I don't mean to be anthropomorphizing the markets, but the pain of loss is psychologically twice as powerful as the pleasure of gain. Don't believe me? It's proven out through studies. Go and check it out yourself, right? I'll probably put some into the notes of this video. And The algorithms know this. They are trained on this kind of psychological predisposition. They calculate your uncle point. What does that mean? The uncle point is the exact price level where the pain becomes too much and you start puking your shares into the market, and it's a mathematical certainty. You know how the casinos, the house always wins? It's a bit similar to that analog there. So who is the predator tracking David's heartbeat? Let's introduce our antagonist. Let's call it, I don't know, Predator Capital, Apex Capital, Apex Capital. Apex isn't just a guy in a suit. Apex is a server farm, and we've spoken about server farms before. They place themselves co-located to the exchange so that they are much closer than your router or your router, wherever you are in the Atlantic or in Europe. Apex doesn't buy 100 shares, Apex buys 10 million shares. And when Apex Predator Capital wants to enter a position, they don't just buy. If they did, the price would skyrocket and they'd get a terrible entry, right? No, Apex uses iceberg orders. They show 500 shares on the books, but underneath that water, there are 5 million waiting to be filled. Remember, when David was panic selling, what happened? Apex was sitting on the bid, quietly absorbing all of that fear. They probably even pushed that price down to the psychological level where they know most traders put their stop losses, right? You look at the chart, you see the support is holding. You think the bulls are strong. No, the bulls aren't strong. One giant whale is just opening its mouth and swallowing all of the krill. And when the Apex is full, what happens then? When Apex Capital is completely full of devouring your own fear, when they've harvested me, you, and David, they turn to the absorption machine. They let the price drift all the way up, and then they start selling it back to David at the highs as liquidity breakouts. Now, I'm saying I'm saying Apex Capital. These entities really exist, and their algorithms are symbiotic with one another. There's probably thousands of these funds that are all trained in the exact same methodology to extract money and to recognize areas of liquidity and pain. But it's not just that. There are other institutional flows, other order books, buying for their huge clients. Retail and traders like us are just one form of liquidity that they use. So we now know that Apex is more than capable of moving the price. David just reacts to the wake of the whale, right? The turbulence of the water that they ensues after their activity happens. But how does Apex know exactly when David is going to panic? How do they know that max pain point? This brings us into the forbidden knowledge section of my video. The dirtiest acronym in finance, PFOF. No, it's not plenty of fish, the dating website. It's payment for order flow. And you probably know about it, right? You love that commission-free trading. Yeah, I bet you do. You think Robinhood is a charity, the most philanthropic, altruistic company out there. Grow up. If the product is free, you are the product. Your broker isn't charging you a commission because they are selling your data to Citadel and to Virtue before your order even hits the exchange. That's how they're making their money. You are the product. So here is the mechanic. You hit buy on your phone, that order goes to the high frequency wholesaler, their algorithm sees your buy order coming down the pipe in microseconds, they race ahead of you, they buy the shares at $200, and then they immediately sell them to you for 201 cents, right? They legally front run you. They scalp a penny off you. You think it's just a penny, but who cares, right? But scale that up on billions of trades. Tens of millions of trades, trillions of trades a year. Do that 1 billion times in one single day, and that is $1 billion worth of wealth transferred from your pocket to a server farm somewhere, paying a Brad for a Clementine a huge juicy bonus for really not doing anything apart from managing the flow. So they control the price to get you filled in at a specific level that's auspicious and propitious for themselves. You are playing poker, but your cards are face up on the table. They see all of your hands. They have the edge. They have the embedded alpha, right? But if you think that's bad, wait until you see the dark engine. And that dark engine is the derivatives market, which has been called demonstratively weapons of mass destruction. Now this is where the tail wags the dog, and I'm not talking about co-integration. I'm talking about a very smart mechanism that happens on these markets. You think the stock price determines the option price, right? Today, it is actually often the other way around because we have such huge flows in optionality and retail traders using it. When you buy a call option because you think the stock is going to the moon, who actually sells it to you? It's a market maker, right? Now, the market maker doesn't care about the stock. We've spoken about this before. They just want the fee. But by selling you the call, they are now short the market. They're short the volatility. And if the stock goes up, they will obviously lose the money. We've spoken about this before. And these are the ways that price is determined. It's not supply and demand dynamics. It's not always that. It's not macroeconomics 101 or economics 101 when they talk about supply and demand. We've transcended that. It might have been that once before, but now we've moved on to the fact that market makers are in the business of counting flows and having to hedge their risk, right? They have to buy the underlying stock to neutralize their risk. And we know that that's called delta hedging. We've spoken about it before on this channel. And what does that create? It creates that feedback loop. And the retail traders pile into the zero DTE and then the price action reacts. The market makers mathematically are forced to buy billions of dollars of stock just to hedge. Who pushes the price up? Which makes retail buy more calls. But who's pushing the price? It's not retail flows. It's not supply and demand. It's these mechanics behind the market, which can be summed up in the monolithic overarching umbrella term of the gamma squeeze, right? Price wasn't moving because of the fundamentals. Price was moving because an algorithm was getting its face absolutely ripped off in the options pit and had to panic buy the underlying stock to survive. These are the real things that actually move price. It used to be the fact that the price would move the options, but now the options are moving the price, right? And the volatility surface is becoming way more complicated because the volatility is expressed on a zero DTE basis. Now, I know some of you are probably smugly thinking, hey, yeah, don't worry about me, Justin Banton at the House of Trade. I don't trade the options. I don't use Robinhood. I just dollar cost average into my S&P 500 index fund like a little good pension fund accumulator, right? Now, you guys are my favorite people to dispel because you are the ultimate liquidity cows. You are the ultimate fee generators, the ultimate liquidity generators. You think you are just investing passively. You are subject to the most colossal, simple money flows on earth. And that's called forced rebalancing. So when you think, hey, I'm not participating in zero DTE, I'm not at the whims of these market makers, you are absolutely wrong because pension funds have strict mandates. If stocks go up a lot during the month, they must sell stocks and buy bonds to get back to their neutrality targets, right? They don't care about the chart, they are forced sellers. So when you think you're not participating in this zero DTE market, you actually are. And who knows all of this information? That's right, Apex Predator Capital, the Algo Predator Capital. They front run all of those flows every single month. They pump the market before the rebalance, and then they dump their bags onto the pension funds who have to buy. It's not a conspiracy. It's literally how the markets work. So you aren't actually an investor. You are the collateral damage in a war between the giant mindless algorithms, just trading against each other, right? And you making out like a bandit is more luck than skill, if you actually think about it. So what do you do in that situation? What do we all do? Do we quit? Do we give up? Do we hold our hands up? Do we just invest passively? Do we go onto uncorrelated assets? No, you wake up, you smell the coffee, you smell the zero DTEs for what they are, and you realize that there are actually ways to exploit these markets as well, not just be a victim to them. Price doesn't move based on the value. It moves based on the liquidity, leverage, and forced participation. You stop trying to predict the economy and you start tracking where the wells are going, the capital flows, the money movements. That's what moves price. You watch the options flow. You watch the dark pools. You stop looking at the puppet and you start looking for the strings. And all of these resources are actually available for us way easier than they ever were before for any other retail trader or for any other trader in all of recorded history. So if you want to actually learn how to see these hidden forces on your chart and how to spot those icebergs, watch some of my previous videos and check it out, right? Because it's the red pill for technical analysis. If you know how the markets are moving in terms of liquidity and capital allocation, you are way ahead of all of the other retail traders out there who are trading blindly, not realizing that options are now actually driving the price. So with that, I bid you farewell and adieu, and I hope you take it on board. Welcome to the real game, boys and girls. My name is Justin Banton. This is the House of Trade. Give me a like, give me a share, and subscribe. See you next time. Ciao for now.